Now, cost-cutting initiatives and streamlining efforts boosting Telkom's top line. During the half-year period, revenue ticked up 1.9%, but this didn't filter through to its bottom line, with headline earnings per share falling 1.8%. And joining me as we unpack the numbers is ICT Analyst at Africa Analysis, Dobek Pater. Thank you so much for your time, Dobek. Now, as much as we did see a little bit of pressure on the bottom line there, it's actually quite interesting because there seems to be a difference in the adjusted perspective. Just talk to me about those differences there.
I think the numbers in general present a, let's say, more of an optimistic or positive picture than we had seen in the past. Even with unadjusted numbers, we see that Telkom is making progress in terms of not only growing its subscriber bases across mobile and also fixed line, i.e. predominantly fiber and other fixed wireless telecommunications connectivity products. It also is improving in terms of its revenue and profitability. Now, these numbers are not astronomical, but I think if we look at the history of Telkom over the past, let's say, few to several years, and look at it from the point of implementing the newest strategy in improving the company, putting it on a more solid financial and operational footing, we are seeing positive results. It's not across the entire group, as you indicated. Group revenue went up by just under 2%, but I think in particular when we look at Telkom, the consumer and small business side that's showing very promising improvements. Not as much at BCX, more the business orientated and larger business orientated, say IT services. New technologies type, new services operation, that's still undergoing restructuring, and it looks like it is going to result in job losses and has indeed already started to do so. OpenServe, the wholesale network operator, essentially also seeing slightly declining revenue, but overall it is seeing stronger performance and growing revenue in the new generation network products. So effectively where Telkom as a group and OpenServe specifically want to move in the future.
Dobek, I mean, just looking at, obviously Telkom's revenue versus their costs, we actually have to look at that, runway for margin expansion. How are they looking there? And is it maybe largely a cost reduction story here?
Correct. So we cannot deny that we have seen some improvements in revenue. I think in particular also we look at mobile service revenue and revenue from fixed line of mostly fiber data services. But you are right in that a lot of the improvement in overall performance that fed into stronger EBITDA improvement is resulting from a cost-cutting exercise. So we saw Telkom Group reduce its capex quite significantly year on year. From where we were a year ago, from quite a bit more than 3 billion down to about 2.7 billion in that period of time, as well as OPEX, the operational expenditure. And I think one of the elements that we see there is also quite a significant reduction by about 20% in capex spent on that fiber infrastructure deployment. Now, one could argue that that fiber customer market is beginning to see constraints. Most of the consumers who can afford, let's say, sort of the middle class type, upper middle class type products have been captured. The game is now moving into lower to lower income neighborhoods where you do normally with lower capex because of the greater density of housing. But also I think the fact that that fiber market at the current moment is becoming to an extent saturated until operators come up with new business models to actually profitably and sustainably penetrate those low income areas.
Dobek, also looking at the standing of the balance sheet, is that at comfortable levels, and does there maybe need to be an extension of runway on debt reduction, or are they comfortable?
Well, I think one would always want to see debt reduced, obviously. Also allows you for greater flexibility in accessing new finance. I think at the moment, the achievement is Telkom's comfortable with it, with what it has been able to achieve over the past year. But I think they will try, obviously, to reduce that debt further in order to just gain a greater sense of security leeway through that debt reduction and the ability to perhaps leverage the ability to raise further debt if necessary.
I mean, it's been quite interesting to also see investor reaction to some of the updates that we have gotten from Telkom. We have seen its shares surging after the release of their trading statement before and now the numbers. So there's a lot of buying opportunity. But for this momentum to keep on going, Dobek, what would investors actually like to see from Telkom going forward?
I think certainly improvement in the mobile space. So we see Telkom has shown quite good performance in mobile customer base growth. It also offers some of the best products in the market. I think as far as value for money is concerned, data products, particularly also I think in the prepaid space, but certainly on the contracts, they've got some very attractive contracts for the postpaid on the postpaid products. So growth in that and your ability to compete in an increasingly intense mobile data environment with 5G effectively becoming more and more prominent as we see operators such as MTN moving into an even newer evolution of 5.5G or 5G advanced, another evolution in that mobile data network through a pilot that they've been now doing with Huawei as a vendor. And I think also expansion, certainly in the fiber space, particularly trying to see Telkom moving from a retail subscriber base to a great extent into that mid-market where the next group of potential customer lies. And apart from that, I think open service is doing relatively well, let's say, and probably on a stable footing. But a turnaround, effective turnaround strategy for the BCX unit, delivering IT services to big corporates, because that's historically where Telkom has had a very good and profitable customer base, and that space is also becoming more competitive. So Telkom Group certainly would not want to see, I think, lose that. If it were to do so, it would effectively start moving into a very different market segment with its key operations.
All right. Well, here's hoping to the strategy that they already have in place there to provide a strong and sustainable foundation for that growth. Thank you so much for your time and for your insights there, Dobek. That was Dobek Pater from Africa Analysis.